Hey guys, welcome to another market update, the first for 2024. Let's start by talking about mortgage rates, the thing that you really hate or love. You love it when they're going down, you hate it when you see the impact on your wallet. As we've sort of said for a while now, our expectation is that interest rates will fall this year, probably start falling around the middle of the year. We've seen some reduction in mortgage rates already, at least are starting to head back to around 7%. There was an unofficial speech by one of the Reserve Bank deputy governors that really didn't shed a lot of light, to be fair. I don't expect to see it have any impact on rates. They certainly, they weren't hawkish, they weren't sort of trying to push rates back up again. So I think where rates have settled at the moment is where I'd expect them to stay until we see a much clearer direction from the Reserve Bank, which we're expecting around the middle of the year. As it stands at the moment, the Reserve Bank has said that it has no intention to reduce rates until early 2025, but most of the market is anticipating they'll bring that forward off the back of poor GDP, poor retail sales, basically poor old Kiwis, right? We haven't been feeling too good lately, and that's certainly starting to reflect in the numbers. So that's it for rates. If I was fixing at the moment, I'd fix for a year. Typically, we're seeing that rate just below 7%. If you've been with your bank for more than 3 or 4 years, then it's definitely worth looking at refinancing. There's some good cashbacks on offer, and that can make it really worthwhile. Flicking over to the housing market, look, we're in a sort of state of flux at the moment. I don't think really anyone's got any clear idea of where it's going. There's an expectation that there'll be some increase in house prices this year. Anyone's guess between 5 and 10%. Of course, that's just a partial recovery because you've got to remember that house prices fell in absolute terms by about 20% in Auckland and 25%, I think, in Wellington. So big absolute falls. We'll see a partial price recovery. But also bear in mind that over that time period, we had about 15% inflation. So in real terms, house prices are still well below where they were at peak. We'll get a bit of a recovery, but not too much. The interesting challenge here is this debate around immigration, which has clearly been running quite hot, versus the strength of the economy, which is arguably running quite weak. And the other side of this is supply and demand in the housing market. We've had a lot of projects finishing, so we've got a lot of residual stock left over from developers, which is going to keep a bit of a downward pressure on prices. We've got a lot of people that put off selling for the last year or two because it was such a soft market. They're definitely starting to come back into the market, so we are going to see more sellers out there. Then we've got buyers who have been around for a while. We should see more investors coming back into the market now that interest deductibility is back on the table. And they've been few and far between for the last couple of years, especially in that second-hand market. So expecting to see property investors back in. Look, this immigration, it's certainly driving rents, which is good for property investors, but a lot of this immigration aren't home buyers. So I'm not really expecting to see them put a lot of fuel on the fire. Equally, the Reserve Bank's been talking about, and commentators generally have been talking about immigration as maybe driving inflation. I think that's debatable. I'm not seeing the type of immigration that's going to drive inflation. It might push rents up, but that's about it. On the other hand, I think it's going to help suppress wage inflation. And keep prices down, which again probably doesn't make us Kiwis feel too good in terms of not getting paid anymore. So look, that's it for us. Interest rates pretty stable, starting to fall by the middle of this year. In terms of the housing market, I think pretty stable. It's going to be a little bit volatile depending on what part of the market you're in. There's definitely plenty of buyers out there. But there's also sellers, so it's really going to be a market-to-market thing. I think you'll see some strength in areas where first-home buyers want to buy, potentially where property investors want to buy with a long-term capital appreciation view. There's going to be other parts of the market that I think will remain weak. That's it for us. Till next time, cheers.